If you're a Social Security or SSI recipient, September 2026 is a month you should not simply ignore. There are several changes, reminders, and deadlines that can affect how you receive your benefits, how much money you keep, and what you need to do before the end of the year. But before we get into the 7 changes, let's clear up one important point. There's not one single September rule that suddenly cuts every senior's Social Security check. Instead, several 2026 rules and payment changes are already in effect, and September is a good time to review them before the final months of the year. In this video, we're going through 7 things every U.S. senior should check right now, especially if Social Security, SSI, Medicare, or retirement income makes up a major part of your monthly budget. And stay with me until the end, because the 7th item is something many people overlook until there's a payment problem. The first change you need to understand is the 2026 Social Security benefit increase and what it actually means for your budget. Social Security benefits received a 2.8% cost of living adjustment for 2026. The increase began with Social Security payments in January, while SSI increases began with the December 31st, 2025 payment. The Social Security Administration says the average retirement benefit for all retired workers increased from about $2,015 before the adjustment to approximately $2,071 after the 2.8% COLA. Now, hearing that your check increased can sound like automatic good news, but there is an important second side to this story. Your Social Security check is only one part of your financial picture. Medicare premiums, taxes, prescription costs, insurance, housing, utilities, groceries, and other expenses can all affect how much of that increase you actually feel. So if you received a slightly larger Social Security payment this year but still feel like your money is disappearing faster, you are not necessarily imagining it. September is an excellent time to compare your current monthly benefit with your actual monthly expenses and identify where the additional income is going. The second thing seniors should check is whether working while receiving Social Security could affect their benefits. This is especially important for people who started Social Security before reaching full retirement age, but are still working part-time, consulting, running a small business, or earning wages. In 2026, if you are under full retirement age for the entire year, Social Security says the earnings limit is $24.8. If you earn more than that amount, $1 in benefits can be withheld for every $2 earned above the limit. For someone reaching full retirement age in 2026, the limit is $65,160 for earnings before the month they reach full retirement age, with $1 in benefits withheld for every $3 above that amount. Starting with the month you reach full retirement age, the earnings limit no longer applies. So if you are working in collecting Social Security, do not simply assume that your paycheck and Social Security check operate independently. Review your expected 2026 earnings and make sure your information with Social Security is accurate. And remember, benefits withheld under the earnings test are not necessarily permanently lost. Social Security explains that benefits can be recalculated after you reach full retirement age. Now here is where September becomes especially useful. If you retired during 2026 or are planning to reduce your work hours soon, you may need to pay attention to the special monthly earnings rule. Some people retire in the middle of a year after earning more than the annual earnings limit. The special rule can allow a person to receive a full Social Security payment for a whole month when they are considered retired, even if their total annual earnings are above the normal annual limit. For 2026, Social Security says a person under full retirement age can be considered retired for a month if earnings are $2,040 or less, and they did not perform substantial self-employment services. For someone reaching full retirement age in 2026, the monthly amount is $5,430. This is why you should not look only at your total yearly income and assume you automatically know what happens to your Social Security. Your retirement date, monthly earnings, age, and employment situation can all matter. The third major area seniors should review is Medicare and the amount coming out of their retirement budget for healthcare. In 2026, the standard Medicare Part B premium is $202.90 per month, although some people pay more depending on income. The 2026 Part B deductible is $283. This matters because many retirees think primarily about the gross Social Security amount and forget that Medicare premiums and other deductions can change what actually reaches their bank account. If you have Medicare premiums deducted automatically from Social Security, look at your benefit statement and your bank deposit and make sure the numbers make sense. If your income has changed significantly, especially because of retirement or another major life event, do not automatically assume your Medicare costs will remain the same forever. Check the official information and understand which income year is being used for your premium determination. There's another important Medicare development that seniors should know about in 2026. If you have Medicare Part D prescription drug coverage, The annual out-of-pocket limit for covered Part D drugs is $2,100 in 2026. Once you reach that limit, you pay nothing for covered Part D drugs for the rest of the calendar year. Medicare also says negotiated prices for the first group of Medicare negotiated Part D drug prices took effect January 1st, 2026. That means September is a smart time to look at how much you have already spent on covered prescriptions this year. If your prescription costs have been unusually high, check your plan information and Medicare records, rather than assuming you simply have to keep paying the same amount. A few minutes reviewing your current drug costs can help you understand what the rest of the year may look like. The fourth change is something many seniors overlook because it does not necessarily show up as a dramatic announcement. Your Social Security account and payment information need to be kept accurate and secure. Your My Social Security account can be extremely important because it gives you access to your benefit information and other Social Security services. The agency specifically warns beneficiaries to be careful about scams, phishing messages, malicious links, and anyone asking for personal information or advance payments. If someone calls you claiming they are from Social Security and says you must immediately pay money to protect your benefits, stop. If someone asks you to buy gift cards, wire money, or provide sensitive information through an unexpected message, that is a major warning sign. Your Social Security benefit is valuable, and scammers know that seniors are often worried about losing their monthly income. September is a good time to log in directly through the official Social Security website, rather than clicking a suspicious message or email. The fifth thing to check is how you receive your Social Security payment. This is particularly important if you're still receiving a paper check. Social Security says federal benefits are transitioning to electronic payments, and the agency encourages beneficiaries who still receive paper checks to switch to electronic payments. The Social Security Administration says paper checks are significantly more likely to be lost, stolen, altered, or returned undeliverable than electronic payments. If your benefits already arrive through direct deposit, this may not require any action from you. But if you still receive paper checks, September is a good time to make sure your payment method is current and that your bank information is correct. Do not give your bank details to someone who unexpectedly contacts you. Use official government channels and verify everything yourself. The sixth change is one that matters particularly to seniors receiving SSI or other benefits with income and resource rules. Social Security's 2026 federal SSI payment standard is $994 per month for an eligible individual and $1,291 for an eligible couple. The federal SSI resource limits remain $2,000 for an individual and $3,000 for a couple. SSI rules are different from ordinary Social Security retirement benefits, so seniors should never assume that a rule applying to retirement benefits automatically applies to SSI. If you receive SSI and your income, resources, living arrangement, or other circumstances have changed, make sure you understand whether Social Security needs to be notified. Failing to report a relevant change can potentially create an overpayment that you may have to deal with later. This is one reason reviewing your records before the final months of 2026 can be much better than waiting until you receive a notice you were not expecting. And now we come to the seventh and perhaps most practical thing to do in September. Check your Social Security record instead of relying only on the amount currently deposited into your bank account. Your benefit is based on your earnings history and the rules applicable to your situation. Social Security says that workers generally need 40 credits to qualify for retirement benefits, and in 2026, 1 credit is earned for each $1,890 in covered earnings, with a maximum of 4 credits possible during the year. If you have a My Social Security account, review your earnings history and benefit information. Look for obvious errors, especially if you worked for many years and have multiple employers or periods of self-employment. You do not want to discover years later that something in your record needs attention. So, if you're watching this in September 2026, here's your simple checklist. First, look at your current Social Security payment and compare it with your actual monthly expenses. Second, if you're still working, check the 2026 earnings test rules that apply to your age and situation. Third, review your Medicare deductions, premiums, and prescription spending. Fourth, secure your My Social Security account and be extremely cautious about scams. Fifth, if you still receive paper checks, make sure you understand the move toward electronic payments. Sixth, if you receive SSI, review your income, resources, and reporting responsibilities. And seventh, check your Social Security earnings record and benefit information for accuracy. Most importantly, don't panic because a video says a new September rule is going to take your money. The reality is more specific. Many of the important 2026 rules were established earlier in the year, but September is a useful checkpoint to review them before 2027 arrives. The goal is not to scare you into making a financial decision. The goal is to help you notice problems early, understand which rules actually apply to you, and use official government information before changing anything related to your benefits. Your Social Security check may be one of the most important sources of income you have in retirement, so small mistakes can matter. A missed notice, an incorrect earnings record, outdated bank information, an unexpected Medicare deduction, or a misunderstanding about working while collecting benefits can create unnecessary stress. Take a few minutes this September to review your records, write down your questions, and verify the answers through official government sources. And remember, never pay anyone simply because they claim they can unlock your Social Security money. Social Security warns that its services are free and that reputable government agencies will not demand advance payments through wire transfers or gift cards. If you found this information useful, make sure you subscribe, because the final months of 2026 will bring more retirement, Social Security, Medicare, and tax-related information that seniors need to understand. Before you make any financial decision based on something you hear online, verify the details through the official Social Security Administration, Medicare, or other appropriate government source. Rules can depend on your age, income, work status, benefit type, and individual circumstances. The smartest move is not to panic. It is to check, verify, and stay informed.